because I realize we do have a bunch of people out there who may not have been or may not be familiar with gold and silver, just really wondering how it works. And it maybe. Everybody, Rob Kientz, GoldSilverPros.com, reporting for JM Bullion. And today I wanted to get basically to the basics. I wanted to bring you a how-to 101 type of video, how to get into gold and silver if you're interested, because I realize we do have a bunch of people out there who may not have been or may not be familiar with gold and silver, just really wondering how it works. And it may be the case you're coming from a corporate environment in which you've only been invested in certain stocks and bonds. Maybe you don't have a lot of financial experience, but you see the risk in the market and you're interested in some gold and silver for long-term savings to balance, the risks that you may have in other investments in the market. Maybe you just own your own home and you don't have any investments and you have some money and you're looking for something for long-term value. Well, this video is really ideal for you because we're going to walk through what are the top 4 things you need to know when buying bullion. 4 things really that you need to know. They're going to help you get started. And as long as you know these 4 things, you're going to be in pretty good shape. So don't worry if it seems too complicated or hard, or you're not really sure. I know we talk about a lot of factors that affect the gold and silver markets, but you don't really have to know that when you go to purchase it. And we'll educate you on all those. If you watch our weekly market wraps, we'll tell you exactly where the market's going every week, and you'll have that information. But I think it does help to explain to people, how do we get into this market? How do I protect myself? What am I looking at? Rob, what are the top 4 things? So this was a reader question. I thought it was an excellent one. So we're going to talk about that. And the first thing that you need to understand is, what is a spot price? What the heck is spot? How is it determined? What does it mean? And why are there different prices for gold and silver depending on where I go? Well, gold and silver market's not all that different from any other markets. It is a commodity. So when you see a piece of gold, a Canadian maple leaf is a Canadian maple leaf. This one's just the same as the one you can get anywhere else. It just happens that, I bought this one at JM Bullion, for example. And I bought it for things like spot and premium, which we'll get into. That's the first 2 points. Let me tell you how spot's really determined. And this is like the biggest mystery in the precious metals, and it really shouldn't be. And I spent a ton of time talking about this just to educate people. Don't get confused on spot. Premiums are really where you're going to see differences. Spots should be pretty darn close. But since it's such a mystery, I'm going to walk you through exactly how spot is determined so there is no mistake. By the way, before we get into that, I do have this handy dandy little chart I put up from TradingView. And the gold line, of course, is the gold price. And then the 2 lines below are the Dow Jones and the S&P 500. These 2 down here, this is the Dow Jones, this is the S&P. And I graphed them back all the way to 2000. And why did I do that? Because during or since the turn of the century, since we've had the new millennia, gold has outperformed the major stock market indices. And when I show people this chart, it just shocks them. They're like, wait a minute. I thought gold was a barbarous relic. I thought gold was trying to catch up. I didn't think gold maintained value. We had this huge stock run from 2000 to 2022, the largest in American history. And you're telling me gold did better? It's up 270% versus, 127% for the Dow and about 100% for the S&P. Hey, if you had invested in the Dow and S&P, you made money. They more than doubled. But if you invested in gold, they almost tripled. And silver is a very similar chart to gold. It's not quite as high, but it's pretty close. And silver, when I graph this out, has beaten the major stock market indices as well. I just wanted to point that out. If you're coming into gold and you come from the stock market land and this has been your 401k, you probably did okay since 2000. But you would have done better just simply holding this stuff, the gold and the silver. And that's a point I wanted to make to start off. Why should you even get into gold and silver? Well, here's why. Because it's beat the pants off of the stock market during the best run in the stock market from 2009 to now that we have ever, well, until 2022 before it started selling off, than we've ever had in the stock market history, in the history of the U.S. stock market. And gold still beat it. So even though it's that unloved metal and silver is this unloved metal, they did better in the stock market. And that's what I wanted to lead off with. But if you want to know what the spot price is, the first thing to do is simply go to jmbullion.com. Go to /charts/gold price, or simply look up prices in the search bar. That's how I always do it. I'm lazy. I just do prices here and voila, it gives me the price chart. The cool thing about JM Bullion's price chart is you can do a day, you can do a week, you can do the entire history of gold dating back to, they have it dating back to the early 90s, which is enough. It gives you over 30 years of data. You can do a 1 year, you can do a year to date. So that would be January 1 of the current year to the present date. Or if you want the full year, you can do that too. Or you can specify, you can go down here and say, well, I want specific dates. Tell me between July 1st, 2013 and July 8th, 2017 because of blah. You know, whatever you want to do, you can do that, and you can do it for multiple ones. We've got silver, platinum, palladium. You can compare Bitcoin to the dollar. You can do the gold silver ratio. The gold silver ratio is a good way to know, should I buy gold right now? Should I buy silver right now? Well, if you see the gold silver ratio go down, it means that gold is losing value when compared with silver. Silver is gaining ground. And so it may be a choice of where, well, silver's rising over gold. I may want to get into that rising price environment in silver and buy a little bit more silver. Or you may say, you know what, gold price relative to silver is coming down. That's my entry point into gold. And so this tool can be a way to help you decide how much of each you want in your portfolio. Personally, I just buy them in thirds. I buy a third of the collectibles, a third of the gold bullion, a third of the silver bullion. That's what I've always done. To each his own. You should do what works best for you. Certainly don't mimic what I do. Do what works best for you. In any case, you can basically graph out what the prices are. But the question is, where do the prices come from? How does JM Bullion get this? How do all the bullion dealers get these little prices they put up here? Where in the heck do you get them? Is it all made up? Is it different? Well, you may see slight differences in the prices quoted each of your local and online dealers, only because they're getting information feeds which may be slightly timed to slightly differently, although they're getting it from the same place. And where are they getting it from? Well, the market is run by the CME Group. This is the futures market. And at the end of the day, to use a common corporate phrase, at the end of the day, the gold and silver prices are determined on the futures market. Now, supposedly, it is the interplay and is the conjunction of, or where they meet between the CME Group's market here in the United States that they manage on the COMEX, the Commodities Exchange, COMEX, versus the London OTC market called over the counter. And where those two meet is where the spot price is supposed to go. However, you'll notice on these handy dandy charts, there's something called exchange for physical. And if you look this up at the CME Group's website, this is where people from the US go to exchange a contract in something over to London. And you can see there is a whopping, this is a gold chart. This is a whopping 11,917 contracts went on this day, Tuesday, January 17th, over to London. So if the prices were exactly the same, why would people be playing price arbitrage between the United States and London? You wouldn't have exchange for physical. The reason there is exchange for physical is either somebody wants the physical on COMEX and there's nobody giving delivery of it that month. Maybe there's not enough people willing to say, yeah, we'll deliver the physical. We want to settle in cash. And maybe they have to go over to London for that reason to get exposure to physical gold. Maybe London has a little bit more. But a lot of times this is just price arbitrage. This is what's called an ARB. ARB on the board, which means if you have the commodity, a commodity, trading in one price in one market and a different price in another market, you can run the ARB. You can capitalize on the difference in prices and buy one contract, sell another, and make the difference. And you're just flipping paper. You're not taking delivery. It's just a daily trade. And so a lot of times this is what exchange for physical is. They're playing price arbitrage. But it highlights the fact that the prices aren't the same on London as they are in the US. And by the way, Shanghai in China is starting to gain a lot of ground as an international market. And the gold price is usually almost always higher there. It's a higher physically delivered market. And I believe that they're reflecting the higher physical demand in that market. And that shows you that gold should be priced a little bit higher in the West. But in any case, this is how it's determined. So you get a price here, 1906.10. That's the price as of the close on Tuesday. That's not the price as of now, because if we go back, we're trading, well, we're 1910.81. So it's pretty close. It's within a few bucks. And this does get updated in real time. And that's why you have a difference. You'll be at 1906.10. This is a little bit delayed from what's actually occurring on their system to the point it gets to their web page. And then these guys are pulling it from the system, and there's a little bit of delay. So you might see small differences in spot here and there, but basically the data is all coming from the same place. And if you want to know how that works, you just go to settlements. And on settlements, you look at the dominant contract month. That's the one that has the biggest number. So that'd be here. And you look at what it settled at for the day. So there was 270,000 contracts that averaged a settlement price of 1909.90 across them. And that's where you get the price for the day before. But this is the price for the day before. This is the ending price. Of course, this market trades about 23 hours globally on something called Globex. And so that price will change from this price. This gives you the last day's closing price. It doesn't give you the current price. Up here is a little bit more the current, and it's pretty close to what JM Bullion has here. That's just a time difference between the feeds. So you'll see a couple of dollars difference, but for all intents and purposes, the futures price in the dominant month really does determine what you're going to pay at the dealer for the most part. Same thing in silver. Right now it's trading 23.61 on the COMEX. JM Bullion has it 23.69, so it's within 8 cents. And again, that just has to do with time differences between those feeds come out and how they're updated on the website. But for all intents and purposes, that is your spot price. So technically, the spot price is the price at any given point in time between the instant settlement. So if you go to COMEX and say, I want gold and silver right now, I'm going to put a contract in and instantly settle, that technically is the spot price. The price I showed you in the screen is technically the futures. It's what people expect it to be in the future. But that futures price, because the COMEX and London are heavily traded paper markets and they are physical. Remember, China settles more physical as a percentage of transactions than does the United States market in COMEX or London. Therefore, the futures really go farther in determining that spot price. I know it gets kind of confusing, but if you just want to know where the spot price is determined, the easiest way is simply go here and you can see it in real time, and it should be pretty close to what you get at your local coin dealer or the online services like JM Bullion. So that's spot. And then you have something called premium. So what is premium? So spot is the base price for that commodity. The premium is the markup for that commodity as it moves through the supply chain. So for example, I have a little Britannia bar here. Let me stop sharing for a moment. I have this 10-ounce Britannia bar made by the Royal Mint in the UK. And I love this bar. It's such a gorgeous design. It's one of my favorites. You can see Royal Mint, 10 ounce, 999 fine silver. It's such a gorgeous bar. I love these. I actually keep one at home to put on the program. I don't keep a lot of gold and silver at home. This is one I always keep. My gold, I had to go dig out of storage for the video. But in any case, this bar, the spot, if we look at the spot price online at JM Bullion, let's put that back on the screen. And I'll walk you through how all this works. So as we go back to JM Bullion, the spot price of silver is $23.69. Okay. Somewhere thereabouts. And so this is a 10-ounce bar. So the total cost would be just move that decimal point. You'd have $236.90. But if you go to buy it, there's more cost to it. Why is it higher than $236.90 for 10 ounces of silver when JM Bullion's quoting it at $23.69 an ounce? That's because this is the price that you get it off of the industrial markets. In fact, a lot of times you'll pay a little bit more than spot to get it off, depending on how much delivery you want. So there's a little bit of supply demand that plays on the industrial markets. But by the time it moves through the supply chain, let's say it's got to go first to the wholesaler. The wholesaler is a guy that takes a big chunk off of the COMEX. So, for example, or straight from a refiner, or even as well, even it could be as well a miner, a direct contract with a miner. Essentially, what they do is you have you take those people, the wholesalers buy from them in bulk, and they buy a bunch. So if you're going to COMEX, it's 5,000 ounces of silver per one contract. So you got to take 5,000 ounces at a time if you want this. And not only that, but the 5,000 ounces comes in a big 1,000-ounce bar. So you get the 1,000-ounce bar off, it gets sent to a refinery. Usually somewhere in Europe, Switzerland, places like that do a lot of refining. It can be done here in the US, China, different places. It gets refined from that 1,000-ounce bar into basically 100 of these, or a mix of other products, depending on what the market's going to want. Those get distributed throughout the supply chain down to your retail dealer. And all of those costs along remelting the bar, redistributing it, branding it, making sure it had proper chain of title so that we know that's a legitimate bar and it didn't slip through the cracks somewhere. We know, as it passed along from the refinery to the dealer, all of that is your premium, or premia, if you will. So it's not unlike when you're going to buy insurance. Yes, insurance costs a certain amount, but you pay a premium to that. That's what the companies along the way that deliver that insurance, have to price it at. And so the premium is really where you see differences. And if you shop around, you can see different prices at different dealers. And that may be the type of deals that they're negotiating. Maybe JM Bullion's doing a better job of negotiating deals from their wholesalers, and they're able to bring you better prices. And one of the reasons I buy from JM Bullion is, one, they're here in Dallas Fort Worth, me, and I have met them in person. But two, their prices are consistently really good. So I have a friend who's in fintech who put together this website called Exploring Finance. And this website, essentially, he did a section on bullion, and he looked at the premiums of the largest manufacturers and graphed it over time. And I'm just going to explain to you why this has changed. So this happens in real time. It draws the map in real time and pulls the data in real time. So it takes a minute. So we'll let it reload and we'll come back and load it. But I'm going to show you here in a moment off this website how you can determine what the premiums are and what the history of premiums are, because he's got it all graphed out here for you for the major online dealers. So you can tell who's got some of the best premiums. And as soon as this loads, we'll get to it. And we're going to look at what is the premium of all the dealers kind of against each other, but more importantly, what's happened to premiums over time. What you're going to see is an increase in the premiums on gold and silver because of demand. And the higher premiums over time have come because of increased demand. So if we go back to the pandemic and silver squeeze at the beginning of 2021, last couple of days of January, first couple of days of February, a lot of people were buying silver back then. We had a lot of enthusiast demand for silver. A lot of people were interested in buying it. And what that did was it increased the premium because you had more demand than you had supply. So naturally, what people are going to do is they're going to say, okay, if there's more demand than supply, prices are going to have to go up, and that's essentially what you have. And that's essentially what happens. So we're going to go back and present that. I finally got this site working. And so down here, he has charts which basically show what the premiums are over time. So as they populate, so you can see the different dealers and their premium. He's got premium over buyback loss. So if you're going to sell it back, how much premium do you pay? How much are they giving you buyback? But you'll notice down here, JM Bullion is consistently on the lower end of the premiums, but the premiums for everybody rose high. Why did they rise high? Because supply over demand. So premiums over time have risen. Here's a historical chart dating back a couple of years. And however, recently they've fallen off. Why have they fallen off? Because we had some silver and gold come back into the market because we had higher prices. Once gold popped 1900 and silver got to 2450 range, 2430, 2440, people started dumping some, and that brought more onto the market. And also at this time, the supply chain problems we have from COVID have basically been alleviated. So premiums are starting to come down a little bit. And this tells you what the market is doing. It tells you where is the market, you know, where premiums been historically across the market. If you want longer term data, you click on this little button, historical bullion premiums, and it gives you a much longer chart, basically a 10-yard chart here for different people that provide it. And you can see during the pandemic, here's what happened to the premium. This is the chart I showed before. This is basically the other chart, a 2-year window. You can see the premiums exploded. This is COVID. This is COVID. And then boom, premiums exploded because demand exploded. And that you can see over here in current bullion pricing. That's this time period here where you can see the premiums have risen. Now they're starting to fall again. So if you look at the historical chart, you see those starting to come down. But that explains why. And here you can really compare and see where are the premium overall. And if it's just a really good site to try to determine what the premium are. Again, JM Bullion does better than most consistently across the board, which is why I buy from them. They also have tons of stock. And so I've come to trust them. The premiums are always very reasonable. And they do a good job, I think, of buying from their wholesalers and providing a wide ranging amount of product. And that's what I'm going to show you here on the website. The last thing that you need to know out of those 4 things, we've talked about price, we talked about premium, we talked about diversification first, and then we'll talk about trusting your dealer. I do trust JM Bullion and fully recommend them. The last point is diversification. There are lots of products you can buy. And when you're buying, you'll get offered different things. Sometimes there's coins and bars, and there's government minted stuff, and there's quote unquote generic or private mint stuff. There's junk silver, there's numismatics and collectibles. All this stuff is wonderful and great. I'm just going to focus on a couple of easy ones. Collectibles, I'm going to break off in a separate video and then come back and talk to you about that. I do have an article out on JM Bullion about, a guide for buying numismatics. It's an article along with my own guide that I developed for people. I'm going to do a separate video on that. That's a separate type of market, the collectibles. I'm just going to talk about the bullion and the junk silver for now in terms of diversification. Now, diversification here means saving money on premium. So dependent upon, we're talking about regular coins and bars and stuff. That's what this chart is for. Is to give you the basic increase in premium depending on, who has it. But there are differences in premium depending upon what you buy. So for example, if we just go to gold coins and I buy a gold coin, I've got a couple of options here. I could buy a sovereign coin like this Canadian Maple Leaf, which I love, which is a beautiful coin. Or, I could buy a generic like this generic round. Let me put this up on screen. I've got 2 options for silver. I could buy a government minted one that's going to come with a little bit higher premium because it's a government mint and very well recognized, or a little bit lower premium on a generic round. Now this one still has the Queen's face on it. There we go. But it's also got a famous singer on the back. So it's an affinity coin. It's a generic round. You still get the nice queen on there, but it's going to be cheaper than this one, which is government minted and gives you more of the official stamp. Now, the advantage of one of these is it's more instantly recognized, and you could command more of that premium back when you sell it. But this one has lower premium to begin with. It's a cheaper way to get into silver. So it depends on what you want to do. Both legitimate options. I have both, but having a little bit of that diversification gives you, it helps you dollar cost average in a little bit better and lower your overall price of getting in while diversifying, the products that you may want. And that's essentially the benefit of diversification. So you could buy a 1 ounce American Gold Eagle here for 2059. You could buy Maple Leaf for 2000. You could buy a Credit Suisse generic bar for 19617. So you'll pay a little bit lower premium, even though Credit Suisse is a well understood international mint. Certainly, people will buy these for you and you'll be able to recover almost a lot of your premium when you resell it. These probably you'll are more instantly recognizable and a little bit easier to sell. But I've never had a problem if I needed to get one of these, get rid of one of these or one of these. And so as long whether it's a private mint or government mint, you can diversify and you can affect your own premium or your own level of profit that you're paying depending on the product that you buy. Another way to get into things is doing like rounds. So we'll use silver, for example. I did hold up this round as a generic round put out by private mint. You can do that here. You can come over here. You can get JM Bullion rounds. These are very competitively priced. Sunshine, 2720. You can get JM Bullion as well on good deals. You can get, holiday themes, lots of different things that you can do here to get different types and lower your overall, cost of getting in. You can do fractional. Now, in the fractional ones where there's gold and silver, it's a little bit higher premium per coin because you still have that same stamp cost of the coin, but there's less metal, so it does carry a little bit higher percentage. But if you wanted fractional, you didn't want a full ounce, you could definitely do that. You'll pay a little bit more. So that's another way to look at it. Another way to get into silver, used to be really cheap. Now it's come up a little bit, is buying junk silver. Junk silver is also known as constitutional silver. It's silver that was minted, or it's silver in coins that were circulating as the coin of the nation. So you've got, old quarters, half dollars, dimes, and things that had silver in them. Well, they're still valued at their silver content. And the great thing is it combines the silver content you get here and a government minted coin without the markup of doing something from the mint. So, for example, if you're buying like a US American Eagle or a UK, Britannia, you're going to pay a higher percentage because it comes from the mint for the purposes of this being like an affinity product the mint makes money off of. Versus if you go get that old constitutional silver I'm showing on the screen, it's already been minted. It was minted to be money. It never came with any sort of collectible value on top of the coin. And so it basically trades closer to spot. So you may get a better deal closer to spot on these. And they're fractional, meaning if you wanted to get a fractional silver round, why not just buy constitutional silver? It's a fraction or a percentage of the overall silver is in there. So that's a little bit on diversification. So the 4 key things to reiterate: determining spot. I showed you how that's determined. It should be almost exactly the same no matter where you go, just depending upon how quickly that information comes across from the market, which trades in real time, to the dealer. And there are differences because it has to cross space and time, and so be slight differences, but that spot price is basically the same everywhere. Then you have the premium, which is determined by the supply chain and how good companies are at negotiating that supply chain. And then you have premium determined by the different type of product, whether it's more a government minted type of thing, like this Canadian Maple Leaf or this UK, or you have a cheaper bar or round that's more generic, or it's junk constitutional, which you can get into for cheaper. You can affect your premium that way. I showed you a website where you can track historical premiums. That's exploringfinance.shinyapps.io. And you can definitely look at that, and you can see that, per dealer or just across the market. And lastly, you want to have a trusted dealer. And I talked about JM Bullion being one of my trusted dealers because of where they are. I've had experience with them. Obviously, I do content for them, but I chose to do that because I trusted them. I actually had a lot of precious metals companies come to me in the last year and a half wanting me to do content and provide content for them and educate their audience. And I chose JM Bullion because I trust them, because they're here, because I already had a relationship with them, and because consistently get good premiums compared to a lot of other dealers. And so that for me is the fourth one is, after diversification, then it's okay. I know how to check spot. I know how to manage my premium and what to buy. I know I need to diversify into different products to have different options and to help me dollar cost average in here and, and affect my overall cost of buying the asset, the gold and the silver. And then lastly, who do I trust? Who do I trust to get my product? In this case, I'm recommending JM Bullion. And if you order at least $200 or more, free shipping on that order is a deal that you get for coming through Gold Silver Pros. You simply have to let them know that you came from Gold Silver Pros. And I think honestly, they'll probably give that deal to a lot of people on their website. But they wanted me to specify that here because it is a good deal. So let's say you're on a savings plan, for example, you don't have $20,000. I just wrote an article on this. Some people are switching their 401k into gold, silver, and they have a lot of money. Some people are like, I just need to kind of get in and maybe I only have enough for, 1 ounce coin. How do you do that? Well, the cool thing is you can dollar cost average in by buying these from the website at JM Bullion because they have consistently low premiums. Your amount of dollars you have to get into that product is going to be lower if you just kind of stuck with them than if you went and bought a bunch of places. So you can arbit yourself. You can go look at premiums and prices a bunch of different places. But honestly, if I just order from JM Bullion over time, I'm probably going to beat my own ability to arbit and try to order from different places a lot of times. Sometimes it's best just to have a dealer that has a wide variety of product with consistently low premiums that you can trust. And boy, if you get that free shipping, how much money does that save you? Shipping is actually pretty expensive. Metals are heavy. And if you're going to buy a substantial amount of this, it'll cost you money to ship. JM Bullion has that offer for you. In any case, this has been the top 4 things to know when buying gold and silver. Hopefully this guide was helpful to you and it really explained really how to get into this and provided you some good resources, how to track premium, how to understand spot, just arming you with the things you need if you're just weren't quite ready to pull that trigger, but thought about doing it. Hopefully this video kind of moves you closer in the right information to do so. If you're interested in collectibles, we'll come back and have a video on that later, and I'll walk you down through my guide on that. That's a freebie. By the way, the guide, it's already out on jambullion.com's blog, and I'll put it out on the next video when we talk about that as well. That's a very interesting market. It had been my best trade since 2018, my collectibles. So I'll talk about that a little bit more and how you can go about getting involved in that market if you're interested. That's a little bit more speculative, a little bit more for the advanced bullion buyer or gold buyer and silver buyer. But we'll get into that for those of you that may have been doing this for a little while and maybe want to step up into doing some collectibles. But for now, this is a good video on how to get in. I think it's a great one. Appreciate you guys paying attention, and we will come back next time and we'll talk about the collectibles and get you educated on that. Until next time, Rob Kientz of Gold Silver Pros and JM Bullion.